Hey, good morning, everybody. This is Bob from Trade Genius. Just want to talk a little bit about these the high cap Nasdaq stocks, and I think we have definitely a change in character here. So I want to go through them. These are the FAANG M stocks. Here's Facebook, and if you notice, huge, huge red bar, and if you notice also, Facebook and Twitter and Google all have basically they're glorified ad agencies, and they take a toll of access to you as the customer. And these advertisers now are pulling back significantly. They're claiming hate speech and all this other stuff, but mark my words, it's just because it's not effective anymore. Nobody's listening to each other on these social media platforms, and they're basically controlled by bots. You're not making any money. And I'm not surprised. When I ran marketing my corporate days many moons ago, we had Google AdSense, and basically all we did was spend money. We could never ever figure out if it gave us any lift at all. We just had no way to measure, and if we, even if we were getting more awareness. And so I'm not surprised these companies are pulling back hard. There's a lot more effective ways in which you can reach an audience than these general blastograms. And maybe they're all figuring it out now that they have to tighten their belts. But Facebook, I think, is in pretty good trouble here. I mean, these stocks have had mega lifts for a long time. Let's pull out to the weekly here and take a look at that. So this was an interesting break back below the double top here. So we may have a fake out breakout here. Something to keep an eye on. So let's move on to our next favorite here. And I'll go Apple. So the interesting about Apple is that I'm not really sure, where the saturation is on this stuff. And so I think as Apple goes, the market goes. And so right now it's still pulling back. I'm looking at this high low. There's a 50% pullback right here. So we'll see if they can hold it or not. And we'll see if it rolls down below the lighter green bar here. Then I think we'll get a push down. But it's still, look, it's so mathematical, but I think we're getting to a point now where maybe there's a little change in character for Apple. Apple's the one to watch, and then next one is Amazon. Amazon's holding up well as well, the world's largest flea market, and the consumer's been strong through this because the kids got a lot of money, and they had no jobs. But they had double their income for most of these kids. It was by design. They wanted these kids to spend money, and a lot of them did. To the credit of my daughter, she pocketed the whole thing, and now in 2 or 3 years, when she's onto her life, she just basically put herself into position for a down payment for a house. So that's why talk to your kids about finances, get them ahead of the game. This was a profound moment in time for them, and some kids pissed it away. Hopefully a lot of kids saved it and be able to launch ahead of their peers later in life. But Amazon's kind of a bellwether on the consumer, and this needs to break down. It's still pretty strong. And then the next one here is let's look at Netflix. Okay, I think Netflix is total saturation. You got Disney Plus, you're getting a lot of other competition, and they're not making any money. And so this is a push down. If it breaks down here, then I think we're going to see a further erosion in Netflix. I'll put Twitter up, even though it's not one of them, because they've been suffering a lot. If you notice, one thing that's interesting to me is these social media companies feel the need to be socially aware. And I learned a long time ago as a marketer is that countries pretty much split into I would say sizable minorities that, in terms of their political beliefs on the left and right, and then you got this kind of squishy center. And so, your job as a marketer is to, unless somebody's doing something immoral or illegal, why antagonize your customer base? And so they've injected themselves into opinions, and so they're purposely excluding a lot of their customer base out of the picture, blocking, banning people. You're just cutting off your size of your demographic, and you're not satisfying your other hardcore because they don't think you're doing enough. And the center's like saying, "Get me the heck out of here." You can see it with the riots, people leaving. I think Twitter's a bellwether here. So just keep an eye on it now. So it had its first failure of this weekly here. If it gets below here, then the tumble may continue. Okay, then we have Goog. Google already pushed down. One thing about Google is, I got the wrong one. Sorry about that. I'm going to say it looked a little odd. Here we go. Google. Here you go. That looks more like what I expected. That broke down too, and that was a pretty sizable one. You're going to see this with all of the social media companies. Boom, boom, boom. They're going to be pulling back on ad, and they have no one to blame but themselves. And they pushed hard on this coronavirus thing too. I mean, they're just chopping their own heads off. Just amazing. And then we got Microsoft, Mr. Softy. Okay, that's holding off here a little bit, staying above this area here on the weekly, and so it's still, considered in a bull trend with no consolidation yet, but these are all pretty overpushed, and so in terms of overbought, and that's the FAANG M's, but there's going to be a lot of stress here. And once selling starts, it'll drag the rest of these guys down because they're all in ETFs. So you look at the Qs here. Okay, I consider this a breakdown in the Qs right here. Okay, and so we're gonna have to watch it. This was the first breakdown here. So if you're really conservative, you're gonna want to see this area break, and then once that goes, then it's Katie bar the door. Or this pulls back and doesn't get back up to this level here, and then we'll have a failure. So just keep an eye on the Qs here. I bought some SQQQ on Friday. Not much. I'm prepared to scale in. I think my average price is 818. I'm willing to buy a little lower here if it does pull back. If not, I'm just going to go ahead and let this one play itself out and take a profit on it and see where it takes us. But this is the first really break, in the whole FAANG thing since the COVID Recovery Act of the Federal Reserve has taken shape. And so be careful, because once these go, the whole market goes, because everything's weighted to the Qs. Anyway, guys, thanks for listening. I'll catch you guys later. Bye.